Welcome to the Accounting Technology Lab, sponsored by CPA Practice Advisor, with your hosts, Randy Johnston and Brian Tankersley. Hi, everybody. It's Brian, working hard at the lab today, but I thought I would let you know that I do have a quick announcement. We have a giveaway. We're going to be giving away one Ricoh ScanSnap IX 2500 Receipt Edition. We're going to make the drawing right after April 30th. No purchase required. Suggested retail value $599. This is has one-touch simplicity, and our friends at Ricoh graciously have provided it to us. With automatic invoice OCR, detachable receipt guide for small and curl documents, and lightning fast 45-page-a-minute duplex scanning. It transforms paperwork into clean, searchable digital data in seconds. If you want to register, it's cpate.ch/scansnap. The rules are at cpate.ch/rules, and the privacy policy is at cpate.ch/scanner-privacy. And for those of you attending the video version of this, I've actually put on the screen now a QR code that you can capture and use to register for the scanner giveaway. Again, we're giving one away. We're going to give it away again right after April 30th, and again, you must be an accounting professional to win. All the rules again are at cpate.ch/rules. So anyway, with that, thanks for joining us, and here we are back in the lab.
Welcome to the Accounting Technology Lab. I'm Randy Johnston with the co-host Brian Tankersley, and we have an additional episode with Joe Woodard. Now, in our first episode with Joe, we talked about the future of AI accounting technology and some big picture things. And the key things that we heard about were how many of the vendors have built platforms with APIs and how we've got big pendulum swings going on in the accounting market, and also how third party and specialty products were playing out. In this episode, our goal is to try to drill into some of those products so you can get a sense of where things are going. By my count, I'm currently tracking approximately 10 AI-based general ledgers. We won't call all of them out in this episode. It's just too time consuming. We'll do that in separate accounting technology labs for you. But I wanted to at least, set the stage for our continued discussion. So Joe, did I get that right?
Yeah.
What did I miss?
Sums up our last episode pretty well, and I'm excited about this one.
I'm very excited about it because, again, your level of execution with Woodard members is really quite stunning for client accounting services and advisory. And you've been, I think, visionary on this stuff for 15 plus years at this point. So again, we're so happy. Brian and I are happy to join you at Scaling New Heights again here in 2026 to teach sessions.
Joe, we'd be derelict if we didn't allow you for a shameless plug to tell us the dates and the location of Scaling New Heights.
Well, thank you. Absolutely. And thank you for that, Brian. And thank you, Randy. It's great to be here. And the best way your listeners can kind of frame out things if they don't know who I am is we do run the nation's largest accounting technology expo with advanced training and breakout sessions and main stage experiences. So obviously I have to watch the chessboard very carefully. My livelihood depends on this ecosystem. And then we are in contact with these software developers all day long. They are our customers and clients. We live with them, and we kind of know what they're working on, sometimes under NDA, before they release it to the market. So we have a unique perspective on the space.
Yeah, and I understand that because I've been under NDA for so doggone long. When I was inducted into my high school Hall of Fame, and I was dating my wife in high school. Our 50th anniversary is coming up very shortly. I had her read what they asked me to write for the induction, and she came back in the room and said, "You did this? You did that? You didn't tell me." And I was like, "Wife, I'm under NDA. I can't speak."
Yeah.
Yeah,
and I've learned it's good to, even on the personal, professional stuff, not to break that line, because you never know. You're 1 degree of separation. Plus, there's a muscle memory. Once you
and it's even worse because I serve on a hospital board, and it was in board training yesterday, the day before recording this session, and it was fascinating because they talked about how things that happened at the hospital, the local cafe knew in less than 30 minutes. They had, confidentiality leaks, and it's like you're not supposed to have that. Sorry, I'm using our.
So we'll be appropriate in what we share. We won't share ahead of the NDAs. All right.
Yeah, and our listeners
You can learn
understand.
so much sitting next to a table of nurses in a bar.
Well, again, I don't know which platforms that you'd like to start with, Joe. I know which ones I
Can I start with the
recommend
payments
you.
category? Because this is the one that everything's hot right now in payments. As a matter of fact, we're seeing providers like Ramp and Rippling run commercials at the Olympics and the Super Bowl. So, and if I didn't get the exact games right, they're national sporting events that they're running, and then they're sponsoring these notable players, athletes. So they're making the big bold moves like you might see major corporations, the top 500 make.
And I'd like to thank them for naming their accountant persona Brian. I'm very flattered, folks.
That's funny. So when we're seeing players like that spend that kind of money at $1 million a minute or whatever that is, and then we're seeing other big movements in the space. Capital One acquired Brex. Well, Brex had always been an alternative banking platform and a payments platform, but now with Capital One's acquisition, they're an accredited bank. So you're going to see Brex now start. This is my thinking. My guess is they're going to start offering much more favorable rewards because they're more liberated to invest the cash they have under management than they were when they were not an accredited bank. And they have a lot of cash under management. They have treasury, they have checking accounts. So you're going to see banking and you're going to see payments converge. You're going to see it all happen around the tech first play. It's not unlike what's happening right now with SoFi in the consumer space. You're going to start seeing more SoFis emerge in the small business space, and they all want accounting channels. And then it kind of goes, so what do you do with the sort of the current guard, the blue bloods of payables? What's the play for, the bills of this world? Well, they've already answered that. They saw where the puck was going, multi-billion-dollar deal to acquire Divvy, so they could fold in and they could play as well. And again, just completely guessing, because if I knew I couldn't share my guesses, I think you're going to start seeing solutions like Bill get involved in banking as well and do some of these treasury accounts, some of these interest earning bank accounts. It's starting to share the wealth a little bit on the rewards in the float revenues that they have. And they're going to kind of get pulled into that zero platform cost. My prediction is their zero platform cost model, make all their money on the float, share a little percentage of that float. And then the more money they have under management, the more they win. I think you're going to start seeing Bill offer treasury accounts.
Yeah, and just taking that, and this is a point of disclosure for our listeners. They may not recall that I was sitting on the board of directors of a bank core processing company, and I know how we are enabling banks to have fintech rails. And in prior accounting technology labs, we've also talked about FedNow and why that's important. And so, you start putting these different pieces together from the different sectors, Joe. I think your vision here is actually quite right. And one other outlier is the play on cryptocurrency, and one that I'm not happy about, gambling in the investment platforms. Okay, there's some good and bad with all this stuff there is, but the fintech industry is changing in such a major way. We've been watching these guys go. I mean, we've been around Renee since before he started Bill, and we understand some of the arc. But what we want your listeners to hear is the arc is changing very fast because
fintech and accounting tech are fusing at the payment space.
It is, and it is fascinating watching this culture clash because my wife's in banking. And I have to tell you that it's amazing watching these you must comply, you must obey the regulators people pair up with cryptocurrencies that are anything goes.
And Silicon Valley entrepreneurs. Yes.
Yeah. And Silicon Valley, which is the most amoral place I've ever seen, is just make your earnings. That's what you have to do. You have one job.
But might this create the yin and the yang we're looking for, to kind of calm some of the volatility down in the payment space and regulate it more while liberating the banking from the 20th century?
Hmm.
Yeah, I think one of the things we've got to look at is the future of know your customer. I think that's the linchpin to all of this because that's the thing that really holds banking together on a global basis, that you know who you're doing business with and that you have the ability to debank them and to enforce sanctions on them. And we've got a
So,
mess
Brian, do you
under.
foresee a time when there are going to be more regulations on the payment space with or without the banking layers? Are they going to start regulating the ramps and the bill expenses and the?
You already have to do know your customer with them. I think crypto
Yes.
is the place that's going to have that. I think it's going to be interesting to see how, with the banks buying up, and having significant stakes in ramps and other things, how the regulatory creep happens in those more innovative spaces and how that affects our ability to get the data we need to do the work we need to do. Because I mean, I have situations that would blow your mind that I deal with my wife in banking, where we want to upload things into a system. Well, you can't upload into it. You have to type it in.
Yeah.
You know,
So this is a great time to introduce robotics.
and
Robotics,
It
robotics and
is.
accountancy is going to be a key piece.
But if I can hold you there for just a minute, Joe, just one final closing comment. I recently received a ramp payment and had to do a know your customer
Mm,
authorization with them.
interesting.
And, that was within the last 7 days of our speaking today. And I would just call out that the tone, that the appetite for regulation right now in the United States is low, but it's still fairly high globally. So your question of, are AP payments going to be regulated? My short answer is I think they are, because it's a funding mechanism for too much illegal activity. And it's pretty easy. If I want to send Joe 100,000 to help pay for his jet, I can do that.
Mhm.
I think a lot of people are betting that this increase in 1099 thresholds is going to give them some leeway in that. But the problem is nature abhors a vacuum, and so does business. And this vacuum between the highly regulated banking and Silicon Valley, I don't know that there's enough money to make that political imbalance stay in place.
Yeah.
Mm.
But now to your AI automation, because we were fans of RPA and have been for a long
Yeah.
time. I first deployed RPA, I'd say over 20 years ago. But the impact of AI on robotic process automation and AI automations, it's mind blowing to me. And it's not easy to blow my mind, but it is mind blowing to me. So, what's your observation, Joe?
Well, I'm seeing it as the little bit of the final mile we talked about in the last episode. Your listeners can tune in and catch that whole thing. But that final mile, it's either a human in the loop, punching the keys, or it's a robot in the loop, mimicking the key punches through screen macros. And where we were dealing with this 20 years ago, and it was very manual in the mapping, things moved around, they broke. Now the artificial intelligence can navigate those field nomenclatures. They can move around with the fields if interfaces change. So we're only going to see a whole new generation of that. And it's going to tighten that window even smaller, or that opportunity even smaller, for humans to play a role in the end to end. Now, whether or not Jeff Siebert at Digits is correct, and we're looking at 2026 as the moment of our own little singularity, end to end bookkeeping consistently without a human in the middle. I think that's aggressive, but I don't think it's decades away either. And I think that this robotic process is going to be one of the things that fills the gap in, and then it will also get squeezed out.
Yeah. And in
As
fact, Joe,
long
I
as,
know.
Brian, there's not a regulatory piece that requires the robot to always get you over that little hurdle, whether it's an MFA layer or whether it's a screen type issue, or I'm a human being, find the fire hydrants thing, whatever it is. We may always need the robot there or the human there, that one little piece where access is controlled. But I think pressure on the market is going to create something more like what we have with Plaid now, very trusted tunneling that gets us around those problems.
Yeah, and when you consider what, again, historical. The Bill Gates wrote a head book where he was talking about how long it took things to happen. I believe we are seeing greater compression on delivery of working products than we have in the past.
Mhm.
And, again, pick your own milestone, whether it's into 26 or 27, it doesn't matter. It's soon. And that's what we're trying to warn you in this episode is about. It's soon. And we'd like for you to be thoughtful about your migration forward. So,
Now,
Joe,
and
what would you
can
say is another
I
major
want
area?
to make sure we move from payments to payroll, but yeah, finish what you were going to say, and then I want to make sure
Yeah,
we.
that's exactly where I want to go
Oh,
next. And so I
perfect,
want to go to your
perfect.
second area is payroll. So let's,
Yeah. So if we're going to take these, yeah,
Can
go
I
ahead.
just say here that with that pressure is creating a lot of minimally viable products that are minimal but not viable.
Thank
And
you.
and so you have to be very careful, folks, because there are a lot of people, there's a lot of snake oil in the marketplace today. And if you remember the Wizard of Oz and that guy with the cart that was going from place to place selling snake oil, he's very much alive and well in this marketplace in some places. Not everybody. A lot of
Yeah.
everybody's trying to do the right thing, but the pressure is such
Well,
that
some people are over promising on what they have, like the
yes.
fake it till you make it. Some people are actual entrepreneur and they're being conservative and they're messaging and they're just spinning things up fast. Either way, Brian, the big takeaway is there's a lot out there, a lot of noise. So payables and then payroll, the two sort of like controlled spaces, and then in part because they're impacted by regulation, I think, and in part because the players are just, kind of more blue blood. And then we can kind of get to the ether. And that's kind of the ether. But in payroll, I'm seeing interesting moves happen with artificial intelligence. First, I'm seeing PEO become more fashionable because there's not as much of a cost barrier to jump to the PEO levels. The technology's brought that price point down. JustWorks and other innovators like that have created a competitive product that's causing ADPs and Paychecks of this world to be more competitive with their price points. And I think that's a good thing. I'm not typically for commoditization, of course, but I do like it when there's a sort of a pricing correction, a competitive pricing pressure. Now, then I'm seeing, of course, tighter integration. But the most interesting thing I'm seeing in payroll is a convergence between the payment space and the payroll space. Rippling has always taken the lead on this one. They're payroll first, that's their DNA. I think they were the first to cross the hedge, but I wouldn't be surprised if Bill doesn't have a payroll product at some point in the near future. The convergence of payables and payroll hasn't been lost on Bill. They have some ways I think they're going to address that soon. And yes, a big steaming bowl of foreboding. I'll just let you figure that out. It's coming. But Rippling's already said we're just going to do it all, from the beginning. I think you're going to see Ramp reach into payroll, Brex reach into payroll, and I think that you're going to start seeing payroll companies buying payments companies and vice versa as we continue to see this space converge. Now, it just makes perfect sense, by the way, that any way you would create a disbursement of cash to a third party is going to run on the same set of rails in one coherent system. It's just two different kinds of recipients, two different kinds of reporting, 1099s versus W-2s, employees versus contractors versus vendors. But it makes sense they would converge.
Yeah, it really does. And, if you consider the PE groups, the HG Capital owning Iris, and Iris being the dominant provider of payroll in the UK, and they've acquired multiple payroll products in the US with Thomson Reuters MyPay and with Accountants World Payroll Relief and more. They have 50 in the UK. I don't know how many they'll have here, but we do see this convergence. And frankly, we can see it going on over into tax. A lot of our listeners don't do that loan advancements on a tax return. But Brian, I've dealt with companies that did that historically. So, I'm actually now reflecting on a convergence with tax actually makes some sense in
And
the
the thing
future.
that I'm thinking about here is that if we've got banking and payables merging, how far out can we be from a banking plus payroll merger?
Mm,
Uh, we live in very interesting times.
yes. And it would make perfect sense that you have a triangulation there.
It does make sense. Well, and of course, in our world, the basis of all this has always been the ledgers.
Yes.
And when you consider, the 8 to 10 plus AI-based general ledgers and Brian's earlier comment about minimal viable products that aren't so minimally viable, many of these are getting there pretty bloody quickly. And I thought it was fascinating to have Jeff from Digits recount that they rebuilt their entire platform in a 48 to 72 hour period running it through Claude Code. And that you can take what would be legacy products and run them through these AI platforms for rewrite. My wife razzed me in this past week because we finally got the water damage in our house repaired enough that we can put my books back. And she said, "Do you really need that COBOL book you used to teach from?" And I said, I'm getting old and forgetful, and I just want to make sure I can still write COBOL. But,
But you don't need to.
but I don't need to, because the darned AI systems can rewrite COBOL into Swift or some other platform. So
That's it.
what about general ledgers? What do you see going on there, Joe?
Well, yeah, general ledgers, of course, are going to be the glue that holds all this together. And I know we talked about that heavily in our previous episode. I'm watching the clock here, and I want to get to the ether. This wide range of bots that are emerging out in these microprocesses. You have them in a couple of different forms. You have month-end closes and automation attach layers. That's a really interesting one to watch. They attach into the larger GLs, the QBOs, zeros of this world. They do the month-end close facilitation. You're going to start seeing pressure on that as a standalone category as Zero and QBO and others, Zoho Books, as they increase their own month-end automation layers. These folks are staying ahead of them because they can move faster and because they're focused only on that goal. So the intentionality, direction, focus, being nimble, all of those entrepreneurial competitive advantages. But at the end of the day, the tortoise catches up. And so that's going to be an interesting one to see, kind of a game of survival. And who gets acquired in, because if you have a general ledger app and somebody's bleeding edge, they've been at this for 5 years, you can acquire the IP and incorporate pretty easily. So I think we're going to see some of that. On those month-end automation players, we've had players now, 2 of them, go in the last 30 days. BotKeeper and Bluebook. BotKeeper being an established player, Bluebook being an up-and-comer. And then we have others I won't name who are back on their heels because I don't want to call them out for being back on their heels, but they're there. And then even as that's happening, we're seeing brand new players come in, not taking the warning signs and the signals from that and saying me too. So it's like a gold rush for this month-end close, but don't think I think the mines are going to tap out pretty fast.
Yeah.
The other area of the ether is in practice management tools, workflow tools, document management solutions. Some of them are doing as microprocesses, saying, hey, attach us as a part of a larger whole, just doubling down on DMS. And, you see Smart Vault doing that. And then others are saying, no, we're the whole of practice management. So we want to be our own platform, connecting to the platform of GL. You just need 2 platforms. And we're starting to see the practice management tools even get into the month-end automation game. So,
and speaking of one that's doing that, Basis also just took 100 million plus.
100 million. Yes.
So, there's another example. And again,
and Canopy just launched a general ledger automation.
Exactly.
It's
So
happening all around us.
We live in the most interesting times I've seen in my 33-year career in this industry. Okay. It's fascinating that in those 33 years, we've gone from 4, 7, and 14 column work papers that had to have the page reinforcers on, and everything done with pencil and pens and adding machines, to where we are today. It's the best of times and it's the worst of times.
Yes. And I
Very
would say
exciting.
then, in that, because I know we're up against it, I would admonish your listeners to choose wisely, but to choose. Because to not act at all in fear of the volatility of the market is worse than choosing wisely and riding the rapids.
Boy, you got your Star Trek piece in too, Joe. I am so happy for you.
Let me throw my Rush lyrics in. If you choose not to decide, you have made a choice.
Yes. If you remain in indecision, your indecision becomes your decision. That's the way I phrase it.
Yeah. Joe, it is such a pleasure to speak with you. I can tell we could have gone another 20.
Have me back anytime, Randy.
60
Brian,
minutes.
It's always a pleasure.
All right. A pleasure to have you here. So
look forward to seeing you at your show in June.
Yes. Look forward to seeing you at Scaling New Heights, where you all are running multiple breakout sessions on ChatGPT, generative AI, prompting, and agent building, right?
We'll do our best for you. Listeners, we're pleased to have you in this episode of Accounting Technology Lab. We'll see you again soon. Good day.
Thank you for sharing your time with us. We'll be back next Saturday with a new episode of the Technology Lab from CPA Practice Advisor. Have a great week.